Hello, namaskar viewers. I am Sanjeev Pandya welcoming you once again to this week's episode, The Tax Talk with AJ. You know by now, the Tax Talk show is brought to you by Sai CPS Services, the tax and accounting firm which everyone talks about it. Every single client walks out very happy because Sai CPS Services, they believe in doing taxes right for any taxes, personal taxes, business taxes, or any tax related matters, as well as virtual CEO, CFO, or bookkeeping services. Tax services, Science CPS services, and their knowledgeable experience on hand, multiple CPS can assist you in that direction. So give them a call at 908-888-8900 or visit their website, sciencecpsservices.com. So that's the our sponsor, and we thank them. Now, before I continue this week's topic, as you may know, that last week we started Trump's 100 days in the office, Trump's 100 days in the Oval Office, and we touch base upon some of the issues such as tariff, such as DOGE, Department of Government Efficiency, and then illegal immigrants, immigration policy. Those were the issues we talked about it, but there are more to talk about it. So this is the part 2 of Trump's 100 days in the Oval Office. And in case if you missed the part 1, you can go online and check it out, the part 1. But now we're going to continue part 2, and the most important factor to discuss in the part 2 is the taxes. And in the second half, we're going to discuss that there are problems with so many policies. What is the solution? And to give their insight and the views and the guidance on those topics is, of course, Mr. AJ Kumar of Science CPS Services, CPA and MBA with Science CPS Services for over 25 years. And of course, we have a guest, Colonel Tavatia, who was with us last week also. Colonel Tavatia, who served in Indian Army very proudly, and we honor him, and we are very pleased to have him here with us in the show. He runs an insurance agency. He is the founder of Amog Associates. Amog Associates offers all kinds of insurances, and they can help you with insurances as well as wealth management and asset protection. These are two important things that you should really keep a note on it, and for that you can contact Amog Associates. So continuing Trump's 100 days in Oval Office, part 2, we're going to go to AJ. AJ, let's talk about the tax bill. This is the tax bill which is now going to be in the talk because President Donald Trump in his first term in 2017 introduced this huge tax cut bill which really benefited high-end individuals and corporations and everything, and that was set to expire 2025 for 8 years. Now, should he continue that bill? Should he make any changes? Please give us a complete overview on it.
Absolutely, Sanjay. My pleasure. We had a very, very successful part 1, Trump's 100 days. In this show, we are talking about specifically the tax cut. So if you recall, the plan was called TCJA in 2017, Tax Cut and Jobs Act. There were a lot of things in there, including that the corporate tax rate will go down from 35%. The highest tax rate was reduced to 21%. Then there was SALT deduction. Property tax was limited to $10,000, not the actual number. The income tax rate for the individual was reduced from 39.6% to 37%. And it comes at a large cost. The plan initially was that this plan is only for 8 years. It will expire at the end of December 31st, 2025. Now, as per the plan that was recently passed in the House, they are making these cuts, a lot of these cuts, as permanent. And believe it, the cost for these plans is going to be $3.8 trillion. There are a lot of new things that are added. Say, for example, now we are talking about not taxing tips. If that goes through, a lot of other things goes through, that additional cost, not 3.8. In addition to $3.8 trillion, we are talking about $1.5 trillion. So in total, if the Tax Cut and Jobs Act is extended permanently and all the new changes that President Trump promised are implemented, the total cost of the system is going to be $5.3 trillion over the next 10 years. And remember, U.S. government is already running in deficit. It's going to create additional deficit for the U.S. government, for the system. But let's start with one thing. Let's start with SALT, state and local taxes. If you remember in TCJA, SALT deduction was limited to $10,000. Now in the new plan, they're increasing the SALT deduction to $40,000. and that includes the property tax, any other tax, state income tax that you may have paid, or local taxes, water tax, sewer tax. All these local taxes, state taxes included, are limited to $40,000, 4 times higher than what was there in
That is interesting.
TCJA.
That is interesting.
As long as your income is under $500,000, under 500,000. If your income is over 500,000, this does not apply to you. But this is again the proposed plan that was passed in the House a couple of days ago. It has to go through a lot of layers, a lot of changes. So the final law that you see may not be exactly the same what we have now. But take another example, tips. Tips create a lot of taxes, social security taxes, income taxes. If tips are not taxed, even for social security, that could create $1.5 trillion that we mentioned last week in the social security deficiency. Forget about income tax. The new changes that we are talking about will create an income tax deficit of $1.8 trillion. Talk about the estate tax. The estate tax was increased to $13.99 million as we see in 2025. If that's made permanent, and now we are talking about eliminating the estate tax completely, that could create a situation where we have to find more money from somewhere. I mean, if you remember, in one of the promises that President Trump made, instead of IRS, we'll have ERS. Instead of Internal Revenue Service, where we are firing people left and right, we'll have an external revenue service, be the tariff or be the other plans that we're thinking about. But leave that aside. Going back to the taxes, corporate tax rate. Corporate tax rate used to be up to 35%. It was reduced to 21% flat. In the new plan, we are talking about reducing the corporate tax rate further to 20% and then bringing the slabs back. That could be a huge change for the large corporation. I mean, 1% could be a large significant number. If you remember, in TCJA for individuals, the highest income tax rate was changed from 39.6% to 37%. That's permanently extended, and then there are plans to reduce it even further for the high income tax bracket. As much as we talk about the poor people like me and you and everybody else on the planet, these new changes are going to be extremely beneficial for people who are making money. Even though we say if you are making more than 500,000, you don't qualify for the SALT deduction of 40,000. But when you reduce the income tax rate by 1% for somebody who is making a lot of money, that results into a lot of saving for
All
that
right,
person.
let's go step by step, because obviously you are the tax expert. So for you, it was just like walking the park, and you gave out one information. Now, let's just talk in the layman's language. I just want to ask you one question.
Please.
You mentioned $5.3 trillion. You explained it very well. That's going to add into the debt, right? And then you mentioned no tax on tips is also going to add some $4 trillion into it. So we're looking at, as it is, we are in a huge deficit. We're looking at $10 trillion more in the national debt after what, 10 years?
No, the changes are computed over 10 years. So it's not 1 year cost.
Okay.
It's over 10-year cost. But the idea is right now when you are running a ship in deficit where you are borrowing every year to make the ends meet, can you afford to have certain changes implemented this year? I mean, right now, the current plan ends on July end. If the Congress does not approve additional $3 trillion of debt by July end, the government cannot function.
The government is shut down. Yes.
The government will shut down. Then
Exactly.
how do you make these changes as much as you want to, as much as this may be the right thing to do, but maybe there is a timing to it. Maybe you don't have to implement everything at the same time. First you create the source. First you create the ERS.
Correct.
You have been talking about creating the revenue through tariff. Take a step back. When you put the tariff of 10%, now the person, the importer, has to pay 10% more to this country, to the government system. What do? This importer will charge 10% extra to this retailer. This retailer will charge 10% extra to the consumer.
Exactly.
So who is actually paying this tariff? Is this the foreign country paying the tariff? No, it's me. It's you.
Exactly.
Who is paying the tariff?
A
So where
taxpayer.
is the ERS? Where is the external revenue source? This is all coming from the consumer's pocket. You can call it tax. You can call it tariff. At the end of the day, I am paying this money.
Exactly. So now, having said that, let's go to Colonel Tewatia, because Colonel Tewatia's input is going to be very valuable. Colonel Tewatia, as you heard from AJ about this, the deficit is going to add into trillions of dollars, one into tax cut and one into no tax on tips tax. What's your take on it? You being a very successful, owner of an insurance agency, I'm sure you must have seen the numbers. What's your take on it?
You see, let me just address the issue which AJ was saying
Sure.
about deficit. If the deficit grows, the interest itself will be difficult to pay.
Exactly.
That's one thing. Second thing, if you are borrowing, from where are you borrowing? You are borrowing from the countries which are surplus. Is that right? If you are borrowing from the countries which are surplus, can you impose tariff on them?
Absolutely. Very good point.
Yes.
So
And that's the situation we are seeing in China right now.
Third thing, Mr. Trump, President Trump is talking about stopping the war all around.
Yes.
What is our biggest export, I said in last episode?
Arms.
Arms.
Exactly.
If the war stops, what are we exporting then and to whom?
to this
To
country's
nobody.
Fighting, yes.
Okay.
Yes.
So what happens? These are the various issues, all these things, but when you are importing tariff on other countries' products, it's going from, as AJ said,
One
that our
pocket to
own
another
consumer's
pocket.
pocket. But the idea is to make domestic product competitive in the marketplace. You see what is happening, since our cost of manufacturing is more because of lowest wages that we pay to the workers is more, and the benefit that we pay to the workers is much more than what is paid into China, Taiwan, Korea or India.
Exactly.
So that's the reason our manufacturing is more expensive here. So it can't be, as I said in last episode also, it can't be a knee-jerk reaction. It has to be a very systematic, progressive approach to transform economy from what it is today
Yes.
to the economy what we really want it to be. So we have to create those products which are used by the consumers, masses, in bulk, in numbers.
Right.
That is what we need to manufacture.
Okay.
And then we have to be thinking, what are we manufacturing? Say, we are a country of immigrants. Think about it. Let's say if an Indian woman wants lehenga, this lehenga can only come from India. You can't manufacture this lehenga in US. It will be absurdly costly.
Especially Indian style
Indian
lehenga,
style
yes,
lehenga.
absolutely,
So-
yes.
And every country has their own lehenga. Chinese have their own ethnic product. Brazilian, Spanish have their own ethnic product that are easy. They're second nature in that country. Creating that manufacturing over here is going to take a lot of time.
Okay, all right. So now, again, the homework has not been done from our end to have these, small to mid-sized industries here in the USA, where they can sell to the US people and make money and everything else. So we're not ready for that, and yet this tariff issue comes in and this tax issue comes in. With that note, we're going to take a break, but when we come back in the second half, it's going to be more interesting. Problems are there, but are there any solutions? Yes, there can be solutions through our eyes and through our knowledge, and we're going to discuss that right after these messages. Welcome back to the second half of the Tax Talk with AJ right here on ITV Gold. As you know, that this week's topic is Trump's 100 days in the Oval Office. This is episode number 2, part number 2, whatever you want to call that. Last week we discussed up to certain length, and this week also we've been discussing Trump's 100 days in the Oval Office. Before I go further, just want to let you know that we thank Science CPA Services for sponsoring the show, a full-fledged, complete professional accounting firm who knows what they're doing and they do it right, and that's why they have happy clients nationwide, no matter where you are, outside New York, New Jersey. Just a one phone call, one Zoom meeting, and everything can be possible. They can be reached at 908-888-8900 or visit their website sciencecpaservices.com for any tax services matter, for any IRS tax audit matter. If you want to start a business and you really want to know what's the best business entity that you should set up depending upon your tax structure and everything else, you should contact Science CPA Services. We thank Science CPA Services for sponsoring the Tax Talk with AJ. All right, so we are now in the second half where we discussed, in the first half and in last week's episode, Trump's 100 days and his policies and everything. Now let's look into the solutions. Are there any solutions? Because everyone wonders and everybody has a right to give their opinion to say what's the solution and what not. This is just what we are discussing. So maybe perhaps you can relate to it, or perhaps you will know more about these policies and solutions. So this is coming from our point of view. What happens in the future, we'll see. I'd like to start with our guest, Kanwal Tewatia. Tewatia sir, I know you've been making a lot of notes, making notes of solutions, because insurance agent always comes up with the solution first. So once insurance agent or insurance agency owner knows the problem, they always have a solution ready. So let's start with you.
There's solution to every single thing
Exactly.
in the world, okay?
Exactly.
Because whenever there will be a problem, there will always be a solution.
Yes, absolutely.
We talked in our episode about Medicaid, Medicare, whether it's going to be there, not going to be there. So what happens is, if nobody is providing you coverage, then who provides it?
Correct.
You do it. Okay, so you analyze your portfolio. We have the strategies where we can analyze your portfolio and we can help you mitigate those risks. So that's one thing. So it's not that once I got I think almost about 20 years ago, I was talking about when the first generation immigrant come in. We come here, work very hard, open a convenience store. I am opening the convenience store at 5 o'clock in the morning. The coffee has to be ready. If the employee is not coming, whether it's raining, snowing, whether I'm having fever or not fever, it's me who has to go and open it. And when my hair became grey, I don't even know. For what reason? I want to put my son to the medical school or engineering college. I want to put my daughter to the law school or
You're right. Absolutely.
CPA firm.
Absolutely.
Thinking what? Are they going to run my convenience store?
No, they are not.
So how many of us have talked about transition of the business or the second generation? What's going to happen to the business? How I'm going to manage this wealth? How I'm going to protect these assets? So for that, there are different strategies which cannot be talked about on a half an hour show. But there are strategies. There's solution to every single thing. But analysis of the portfolio is very, very important. Every risk can be mitigated. Every risk can be transferred to somebody else at a very, very low cost. Many people are not aware of it. Knowledge is power, and education is the key to.
Absolutely. All right. So that's a Medicaid from your Medicaid point of view, and then once on a portfolio you can offer solutions. But my question to you is now, we discussed in the second part we discussed these issues, taxes. Should the tax cut continue beyond 2025, and what AJ mentioned, what it could do, what it could not do, especially in assault, from 10,000 to 40,000 deductions, and if this tax cut continues, obviously there is going to be in the immediate future there will be more debt adding into the national debt.
Okay. The taxation. The only two things permanent in life.
Correct.
Taxes and death.
Exactly.
All right?
Yes, absolutely.
So taxes are going to be there.
Yes.
Only thing is that the size CPA firms tells you when to pay and how much to pay.
That's it.
Okay.
All right. So then let me come to you for quickly on immigration issue.
Okay.
How could this country resolve this immigration issue? Countries built on immigrants, right? This is the only country in the world which is built on immigrants, and immigrants have successfully excelled in each and every single field. Illegal immigrants is a problem. Let me just take you back a little bit, because when this issue comes in, it comes to my mind. President Trump in his first term wanted to build a wall, right, to stop these individuals coming in. Whatever happened to it?
He is still trying to build it. If you read the House bill that was passed yesterday, there is $40 billion, not million, $40 billion blocked in that bill to create a proposed wall. It's President Trump's dream.
So we're going to spend the money.
Somebody in the first term.
Earlier he was saying that
exactly.
Mexico will pay.
100% right. In the first term, he wanted the other countries to pay for his wall. Now, in the new bill, he is blocking $40 billion for this proposed wall.
Okay. And you think that would solve the illegal immigrants problem?
Sanjay, there's a saying in India that you put a lock in your house. Is that right?
Yes. Yeah.
Lock is meant for whom?
कुत्ते
बिल्ली के लिए होता है, चोर के लिए लॉक नहीं होता, उसने तो तोड़ ही लेना है.
I agree with you. 100%.
So now coming about immigration, let's on the serious note. Earlier on I said what we are exporting? Technology. So to create the technology, whom are you inviting? H1B visa IT people.
Yes.
AJ said The American worker cannot create the Indian lehenga.
Hmm.
So call those workers over here rather than calling this thing H1 or IT people.
Okay.
Okay, call those workers that you want to
have
create.
You have to make this whole immigration a little bit more lenient. Why do you create a situation when people have to illegally come over here? If you make the rules a little bit more affordable,
Yeah.
more lenient,
Because these immigrants, they work in the restaurants, they work in the grocery
You
stores, they
need
work
them.
everywhere. We need them.
We
because
need them to work.
American
So
kids,
if we
they
make-
don't want to work. They
Yes.
don't want to bend and
If you-
pick up the piece of paper.
if you create some flexibility around
Yes.
it, let them come, let them work for a number of
so
years.
why doesn't Trump have advisors to advise them that listen?
I'm sure there are. I'm sure there are smarter people than us,
Okay.
me and you together. But
Fine.
the execution is painful
All
right now.
Okay, all right. Now let me touch base upon another issue, AJ, that you're going to start with this because we have a little time left. Then this is a very serious issue. The home sales this year has been lowest since 2009. We have a big problem in the real estate. There are so many commercial properties are vacant. Housing market somewhere is very saturated. Some places it's overpriced. Some places it's undersold. Mortgage rates now they have climbed back above 7%. Just recently, it's in the news. What is happening? Where are we right now? Should we concern about economy or recession, or is there a hope? How is this problem going to be solved? Because President Trump tells Fed Chairman Powell to cut down the rates, and Fed Chairman Powell is saying, no, I cannot cut down the rate, not even 25 basis points.
So it's going to be a difficult route. The housing market, especially, was ballooning up. You put the house on sale, and people were throwing money. People were paying more than the listed price.
Yes.
It has gone too far. Last quarter, January to March, was the first quarter when economy actually contracted, minus 0.3% as opposed to plus 2.6%.
Correct.
If it happens for one more quarter, then officially we are in recession. We can call it soft recession, hard recession. But if the second quarter contracted again, we are in recession. So the housing market, especially the real estate market, commercial real estate, will see the hit first, and then later on you will see the residential real estate. And if you take a huge step back, go back 8 years, between 7 to 10 years, this is how the cycle works. We came through a very tough real estate market 10 years ago. Then it became a situation that you put the house and people are throwing money at you. You put the house on sale for 300 and people were getting 350, not 310, 350. Now we are coming back to a situation when the warehouses are empty. There is no money in the market. People are scared. Nobody is spending. If you are not spending as a consumer, as a retailer, I can't sell. If I can't sell, I'm not buying more from the manufacturer. The manufacturer is not getting more from the importer. So it's a chain reaction. When the economy starts contracting, everything will start going down.
But don't you think President Trump or his advisors should be really focusing on the real estate market? Because obviously immigrants and this
That's
country-
not the focus here.
How?
That's not how it works. You make certain promises and you keep telling yourself, it's self-edification philosophy. I keep telling myself I'm doing it right. My intentions are right. As President Trump, people like the advisory board that he has, you're talking about billionaires. You really think they see the market effect on the first hand? They hear the news and people hear what they want to hear. People see what they want to see.
Absolutely.
There is good news, there is bad news.
All right. So basically what you're saying, there is going to be a little sensitive, tough time ahead when it comes to economy.
I believe so. It's
All
going
right,
to be
let me,
tougher.
Let me go to Colonel Tawatia. Colonel Tawatia, you can shed some light on that issue, but my main question to you is unemployment. Where do you think this country is heading into that direction, unemployment, where people will be losing more jobs? The unemployment rate is going to go high, or what do you think?
If the economy is shrinking, obviously it will affect everybody. Unemployment will affect the employers. If an employer cannot afford, if nothing is manufactured stuff is not being sold, what is going to manufacture?
Correct.
His warehouses will be full of the inventory that he already has. There's no requirement to manufacturing anything new. Similarly, if I'm not manufacturing, I'm not needing more workers. If the government is trying to say, okay, increase the minimum wages, which we have been seeing that. So if I can't pay more wages because I'm not making enough money, then what I'm going to do? I'm going to reduce the number of people working on that.
Absolutely.
So it's a
cycle.
multiple effect. I would say chain reaction.
It's a ripple effect. You're right.
Any one of you can offer some kind of solution on this, AJ, on the real estate or the unemployment matter?
Well, I think short term, like anything else, when you go too far on anything, in the short term, there are going to be some painful times. Right now, it's not the time to invest into the market or to invest into the real estate. It's the time when you want to conserve
Okay.
the cash.
Good. So stay there. Anything? We have 30 seconds.
Diversification.
Hmm.
Diversification portfolio is the key. It's not that one shoe fits everybody. We can discuss everybody's portfolio and we can suggest some strategies that they can still maintain and make money even in this market.
Very good. We like to thank Colonel Tavatia for your participation in the show, and your views and points are well appreciated. Viewers, you can contact Amog Associates Insurance Agency. You can just Google them and you'll definitely see the information on the screen. For any insurance needs, no matter where you are, give Amog Associates a call and ask for Colonel Tavatia, or you can ask for Sima Zaktiani to speak to, and they will definitely help you out for your insurance needs. So once again, Colonel Tavatia, thank you so very much, and I hope to see you again in a soon. AJ, as always,
Absolutely.
you are the force of the show, and thank you so very much for your amazing, valuable inputs and a lot of good information when it comes to taxes. So I appreciate that. And folks, once again, Science CPA Services, for any tax matters, any help that you need, reach out to them. 908-888-8900, sciencecpaservices.com. Until we meet again, same place, same time, I am Sanjeev Pandya, wishing you all happy, tax-free, tariff-free days ahead. Do take care of yourself. Have a good, happy weekend ahead, and so long.